The Organization for Economic Cooperation and Development has revised its global growth forecast for 2025. The adjustment comes in response to heightened trade barriers and increased geopolitical uncertainty.
2025, high-frequency activity indicators point to some softening of global growth prospects. Surveys suggest lower business and consumer confidence in several strong-performing economies such as Brazil, Canada, and the United States. Indicators of economic and trade policy uncertainty have risen sharply to very high levels. Inflationary pressures persist, and recent inflation rates rose in 20 among 37 OECD and selected other economies with available data.
The OECD cited trade tensions, especially between major economies, as a key factor driving this downgrade. For the United States, growth is now projected at 2.2% in 2025, a drop from the previous forecast of 2.4%. The Eurozone's growth is also revised downward to 1%, down from 1.3%, and these changes reflect weaker growth in both the US and Europe, which could dampen global economic recovery. Despite these global setbacks, China is expected to maintain growth. However, inflation is emerging as a growing concern worldwide, with the OECD predicting it will remain higher than previously expected, particularly in countries like the US. Trade disputes and tariffs, including those between US, Canada and Mexico, are expected to fuel inflationary pressures further. The OECD warns that if further trade barriers are imposed, it could significantly harm global growth and exacerbate inflation. In India, the OECD has also reduced its growth forecast to 6.4%, down from 6.9%. While India remains the fastest growing major economy, it faces uncertainty due to global trade disruptions. The inflation forecast for India is also raised. On a more positive note, though, the OECD suggests that increased defense spending in European nations could provide a short-term boost to growth, though it could lead to longer-term fiscal pressures. The outlook indicates a complex global economy with risks from trade wars and inflation, but opportunities in defense-related sectors.